now. And we'll go in and do some testing. Pleasure to meet you all, by the way. But like I say, I know trading is a bit of a challenge, but look, if you just execute this, there's a lot of reasons why this works. I won't go into all of that right now. And if you've got any questions, just let us know, drop them in the chat. All right, so we've got the US dollar, Japanese yen, and we're on the 6th. So what's the first thing that we see? Here, you see a mighty gap. Now, does everybody understand why gaps like this get filled? Just type in the chat or sing out.
Understand the smart money reason.
No, there's a real reason, because this gap here basically means when interbanks are trading, they've got to offer liquidity on both sides of the market. And it's a simple function to make sure that we don't go broke at the banks, and it's how the whole market functions. There's virtually no gaps you'll find in the market. All you need to understand about that is in order for the world trade to continue on, every order gets filled all the time, every time. No trade is left uncovered. But as we approach it, we'll get into it a little more. So here we've got the start of the day, right? So we can just fast forward a tiny bit. Now, this is the start of the day. One of the rules, just as a quick recap, is we will never, ever trade prior to 3 o'clock, okay, on the server time. And the reason we do that is that's because when Japan and Australia comes into market, and essentially everything starts kicking along. So right now, we're not doing anything, but we are going to mark up the candles. So which candles are we going to mark up? Well, here we have a white candle, and here we have a black candle. And we're going to mark the bottom of the body of that black candle. That denotes the top of the range. If anybody has any questions, just sing out.
Is this UTC time?
What time is it? It's standard broker time. What broker are you on?
I see markets, but I have it set to my time. So
Okay, it's standard ICT, not ICT, it's standard IC markets broker time. I think we share the exact same one. So 0 o'clock, you're in New Zealand, I believe is 7 a.m. my time, 7 o'clock, 8 o'clock, 9 o'clock, or 8 o'clock, 9 o'clock, 10 o'clock. No, it's 8 o'clock. So 3 on my server is 10 a.m. Sydney time.
New Zealand.
No, Sydney. So that would be about 12 o'clock your time.
12.
Yeah. But
12 a.m.
essentially what you need to do is make sure that you've got the stock markets open. Okay. Because when stock markets aren't open, trade's not functioning properly. And that's why markets tend to move at that point. So we've still got 60 minutes to wait. So during this time, this is where a lot of the large institutions are managing their books. You don't really want to compete against these guys. All right. What have we got? You just mark this up. I'm going to slow it down a bit now, so it's going a tiny bit too fast. So where would we mark this up? We're going to mark this up here because we've got the white candle, black candle, bottom of the body, white candle, black candle, bottom of the body. And here we have white candle, black candle. We're going to mark the top of the body because we're going up, if that makes sense. So here's the bottom of our range. Here's the top of our range. When we're dealing at the interbank, or when we're dealing at the bank level, we need to make sure we have a black body form into a black body, or at least get into that zone. Otherwise, our books are not balanced and we have a problem. Let's zoom in a little bit right here. This is your signature setup. So here you have your white candle, your black candle, you have a push up. Then you have an attempt to come and balance the book. A book would be balanced if this candle here came into this candle here. Okay, it tried. We had a push up. And essentially what happened is We've now broken the top of this candle. So where do we expect this market to go from here? Throw it in the chat, up or down.
Up.
Awesome.
Upward.
Beautiful. Where are we going to go to? Where's our first port of call? Right here.
The next
Okay. Yeah, because when it hits that, this particular move is closed. It might go up here, but notice we've just gone into market open. And if you notice from my first video, I always say around market opens, right? That's when they always close markets off, because here they're balancing their books. Oh, sorry, here they're sitting there and balancing everything up, but they're basically taking some risk. When stock markets come on, that's really new information. Okay, so around that time, no one wants to be having an open position. So you always see a tendency for them to close off. So we're going to go into a little buy here. I'm expecting it's not going to go below this candle. Okay, and I'm expecting we're going to go there. It's not a huge trade, but I'll go through what I do for risks and all that sort of stuff and targets very shortly. See if we get there. Lovely. 4 pips. Now, just so you know, my target for a daily set of trades is I like to make 20 pips. There's reasons for that, which I'll go through at another time, but it's more to do with clients that I trade for and expectations. And so it's not really what retail would generally do, but if you're sort of breaking up your orders and you're doing an awful lot of lots, 20 pips a day is an awful lot of money. Okay, so what have we done here? Now I've marked the top of this candle because we've broken out of this zone. Okay, so we'll just scroll forward a little more now. Okay, here we have a black candle. It did breach this black candle, so this particular move is broken, but this particular candle is not, oh sorry, this particular start of the move is not closed. So if this candle breaks below here, where would we expect it to go? Here, right?
To the bottom.
If it breaks above here, where do we expect it to go? Here, right?
The point of interest.
That's exactly right, because here we've got an open position, here we've got open positions. No one likes losing money, they're going to close it out. I don't know which way it's going to go at this point, but we'll have a look. Okay, had a little break there, I might be a bit premature, but my risk isn't going to be huge. And I'll have my finger over the kill switch if I have to. Now it's doing what we want.
If that white candle hadn't printed, would you have still taken that? The first one after the black candle?
I only took it sort of when it broke above here.
Regardless of if it was the first candle after that or if it was the second.
Yeah,
Like,
I don't
would you
need it
have
to be
waited?
no, I don't need it to be the first candle. I'm just waiting for a break of the structure.
So it
First
doesn't matter
candle.
whether it's the first candle or second.
No. But if I
Okay.
had a black in here, if this was white and this was black, that would break up the sequence of events. So that might be a
Yeah.
different story.
Okay, fair enough. Thank you.
That's okay. So now if this move is to complete, I don't expect it to break here. Okay. Oh. Let's make a fool of me and come all the way back. Should take it out. See how it's coming down here. In the real world, you'd sit there and go, oh, this is terrible. You might have even taken your profit by now. A lot of that's designed to shake you out. And the reason I say that is because if you look at the structure now, when that was coming down, everybody was going, oh, this is looking so great. That's designed to get you out of the position. Really, you've got to clear that candle for you to be uncertain about where things are going. So look, 6 pips, I'd probably take that. Happy days. Let's zoom out a bit and let's see what's going to transpire from here. Now, if you got any questions, just ask them while we're watching some setups. I'm now going to mark the top of this candle because just from a structural perspective, here you've got your black candle couldn't touch. Here you had a sweep. So yeah, that's the start of a new move. Black candle couldn't touch. Black candle, this is starting to look efficient now. And also, I've had a chat about this before with you guys. Now you've got move 1, move 2, move 3. Okay, as the moves continue on, the probabilities start to, aren't looking as great as they once were. So really you want to be in either on the first moves or the second moves if you can. Third moves, yeah, I'll take. At fourth moves, I tend to give them a bit of a wide berth just because, again, I'm just trying to make my money and be done for the day. So here, for example, this is an example of a fourth move. So you've got your black, you've pulled back into the black, so it's not, it's still an upward trend, but you haven't actually pulled back into this candle yet. So you'd assume that this is going up. This is an example of a trade I probably wouldn't take, only because it's probably a little bit late in the move for me. But as you can see, the break of that black is a pretty good sign that things are going to keep rocking along. So it would have been a nice trade. Any questions so far? Awesome.
Sir, this is Mahendra.
Hi.
Sir, what we taken as a breakout, either wick or body?
Look, generally I'll go for I will go for the body breakout, but just let me show you. You've got to remember, when I'm looking at my charts, I've got all US dollar pairs up. So even if I'm getting if it's looking like everything is starting to move, so I've got the Australian dollar moving up, the Great British Pound dollar moving up, the Euro moving up, this moving, the UK moving down, the UJ moving down, the US Swiss moving down, I've got a lot more confidence. But if you just want to go purely mechanical, I will typically go for the body. But you've got to have a little bit of common sense. Like if something's breaking out, but everything in the US dollar is going the other way, you might just want to sit it out. Doesn't happen very often, but it's just something to keep your eye on. And again, set yourself a profit target and stick to it, because you don't want to be sitting there trying to make 300 trades a day. You really want to get your targets and just get on with your life. I mean, the longer you stare at charts, the more you start to see things that aren't there. Does that answer your question?
Yes, sir.
Thank you. But
will you be doing London and New York as well?
Yeah, we'll do the whole day. I want to see how this whole day pans out, because this was the day that LSD was testing. So I want to make sure. Oh, cool, man. Nice to meet you. Well, nice that way, after we've done this, you can check them against your trades and we can all have a look and see what the go is.
Yeah.
Okay, so now we're still in an uptrend, but we're getting more efficient. You can see we're coming down, testing a few of these black candles. Not seeing much here. How did your trading go this week?
Well, with the rudimentary understanding that I did have of this method, it was fairly okay. It wasn't that bad, but it wasn't particularly great either, just because there were some things that I was confused about. I didn't know whether the buys took precedent. I didn't know whether the sells took precedent sometimes, because of those pictures that I showed you. Sometimes it's unclear whether or not you buy or you sell, because both of those setups can occur at the same time.
Cool. All right. Well, hopefully we can knock all of that on the head this session.
Yeah.
Okay, so now we've had white, black, break of that. So where am I going to mark up? Oh, you could mark up here technically, but we're going to put a little line up here. Does everybody understand why we're marking that one off?
Yeah.
If you don't, just sing out. There's no silly questions.
So
Okay.
why are we not taking a sell?
Because we haven't had a white candle. So what we want to see, right? We want to see a change. So you got your white, you got your black, then you've got a black push down. Now I expect it to come down to around here, but what I want to see is a white candle. And I want to see a white candle that can't pull into the body of this black candle. Because once that occurs, we've had an attempt to get back into this body, right? And if that attempt fails and it breaks to the bottom, it's going to go and fill the other side of the range. Because think about it, we're trying to engineer our moves, right? We've seen it push down, we've said, let's try it again. Oh no, it's failed. We're not going to sit there and keep pumping money into it. We're just going to back off until it comes into our range of area that we want to buy as a bank. Okay, so 99% of the time, once you see that failure, you're going to go to the other side of the range. Does that make sense?
Yeah, I think that's the thing that I was missing.
Yeah, see how, oh, is this going to finish? No. But like if this candle finished white and say up here and it couldn't get into this body, that'd be an abject failure. Maybe it's just going to walk away and it's going to go, or at least down to one of these zones. And also to notice where these things start to react. This is where decision points are made. Now, as you get more experienced, right? And I don't want you to start doing this now, but you know, over the next sort of coming weeks and months, when you start to see this stuff, like where do you think this price is going?
Probably to the low.
Well, I don't know if it's going to
So
go to the low, but I knew it was going to go pretty much to there. You know, once
Yeah.
it started breaking down, there was very little chance that it wasn't going to go there. It might pause mid-move, but what we need to see, now we've broken out that zone, is we need to see a little push up, a little attack.
And does a black candle have to print there? Because it did take that low of that white candle just then.
Yeah, it did actually. That's why I stalled, because I might have actually jumped into that, but I didn't.
Because the way that I backtested it off of a candle having to print there. So I would have waited for the black candle to print and then that low to be taken.
Yeah, so
But
I would have
wasn't
waited
if it
for
was
that.
or not.
I would have waited. No, actually, you're right. What I would have done is here we had the white candle, right?
Yeah.
Here we had the black candle. At the sort of when it starts to break here, there's a chance I would have got in. Now it's half a pip and I'm old, so my eyes didn't quite catch it in time, but there is a chance you would have taken a small trade there. But, you know, again, that's where the other markets looking at it gives you a bit more context. And we might still go down. I've got no idea here.
So mechanically, would you have taken it on the break of the white candle or the break of, would you have waited for the black candle and then that break?
Well, they're pretty much equal. So, and I'm a body trader, so I probably, like, to be fair, there's a good chance I would have taken it right there.
Right.
Okay. But I didn't, and it's only because this is probably, I'm running at about 30 speed. But in the real world, I've got to call it, I probably would have taken a small loss there. But now we've got to change. So what have we got now? A black and a white and a break. So this probably a long, I probably missed it. But with candles like that, doesn't look overly appealing for me anyway. But where do we think this is going to go to, guys?
To the top.
Let's see. I don't all work out, but they mostly do.
So you wouldn't have taken a buy after that break?
Maybe. Technically, it is a buy, and I probably should have taken it. The reason I'm saying I didn't take it is because these candles looked a bit ordinary. Like, let's go real world. In the real world, right, I probably would have taken a little short there, and I probably would have been down a bit and gone, oh no, that sucks. And then it would have come straight into another shitty candle, and then I would have seen the move. So, whilst yes, technically it's a long, I wouldn't have taken it in the real world because I would have been pissed off about that one. Does that make sense?
Where would the long be?
Here you've got your black. Here you've got your white. Here you've got your black. You can take it at the break here, but it's a bit dicey.
Oh yeah, yeah.
So they're not, but they're setups, but they're not things that oh no, I'm running out of time. Guys, I might have to, if I do run out of time on this, I'm going to have to put another meeting on, and I'll put it in the chat. We can just all jump back on. Everybody cool with that?
Yeah, yeah. Would it be today still, or would it be?
Yeah. We'll do the whole day. I want to make sure we get everything done. It's just I haven't run a Zoom meeting in years and years and years.
So would there have been a sell there just then?
No, because here you've got
There
your
is no
white,
white candle.
here you've got your black. You haven't seen a white try and attack this. Okay. Technically, well, look, I guess you could be right because here you haven't actually pulled back into this, but no, I really want to see
Yeah, that's
it.
what I was thinking.
Yeah, but so no, probably wouldn't have taken it. Is it coming down? I reckon you're probably right, but again, if the charts aren't looking super duper clear to you, look at another pair. We've got 6 to play from, so you're always going to have ample opportunity. But if it doesn't look great, don't take it. But there you go. We came down, swept the range. Sure, we'll get it set up soon enough.
So could we not have taken a sell because it broke here? Yeah. They tried to go up, failed, went down, broke.
Where was your? Well, yes, you could have, but there's probably too many candles in it, right? So your risk reward on that, like I'd be looking at that saying we're going to go down here, but we've got to. There's a chance we could go back up there as well.
Oh, okay, cool.
So now I'm going to mark the top of this candle because we've got to push up. Still stuck within the body of that candle.
So can we take a buy?
Okay. No, and the reason we can't take one just yet is because we have a black, a white. I now need to see a black try and come back and touch that. If we push up here and get a black that can't come into here and we flip, then we're going to go and take out the top of the range. Think of it like you need to see an attempt for the market to balance the book. And if it doesn't balance the book and it's a failed balance of the book, it's going to continue on. But you see, when you say, could we have taken that buy? No, because now we've had this body come into this body, and that essentially means that that move's closed. There's just nothing much to do. And what time is it? Actually, I think we're at lunchtime now too. So this is why you're getting a bit of dead volume. Okay, so now where's our new point? Where would we draw our candle from? Everybody understand why we've got that there?
Yep.
So we see a black candle that can't close into here to continue up. That's what we're going to be trading.
So you're always trading in the direction of the current, well, most recent leg.
Yes.
Okay.
So you want to see the leg, you want to see a fail.
Yeah.
And this is what I mean by a fail. Right, so you've had your swing, you've had your break. This attempt to push down into this body to balance everyone's position, right, didn't do it so far. It's turned. Now, if this particular candle breaks above here, and now I go for the body, sometimes I go for the wick, depending on all other markets, but let's be purist and we'll go for a body break, then we'll take the trade. But the other thing is, like, I expect the market to have issues here. I might get lucky and it'll go to here, but we'll see what happens. No break. Right. A bit late on that one. But see how it runs into issues right at that point?
Yeah.
So our new point is going to be right here. Realistically, I'll take that loss at 1.6 pips. Although I probably could have given it to about here, but my take profit, there wasn't a huge amount in it. If that, so that was a pretty ordinary trade. I'd be kicking stones if I actually did that in the real world. And also too, running on fast forward sometimes isn't the greatest thing. And guess what? Here we had a break. We broke this candle, which I don't love, but we've still got this zone right down here. Here we've broken above that, and we probably should have been entering into longs right about here. Where do you think we're going, guys?
To the top.
Okay.
Well, let's have a crack just to see if we do get there. Lovely. Now, again, that was a ridiculously late trade. Does everybody understand that that was a ridiculously late trade from my perspective?
Yeah.
Yeah,
Yeah.
cool. Well, I thought I'll throw it on just so we don't all die of boredom. All right, now we can get rid of this blue line. Does everybody understand why this line's here still and why this line's here still?
Yep.
Yeah.
Beautiful. Now everybody know we can get rid of this line because we just filled that range.
But how come you took a buy before the candle closed?
I took it on the break of the black candle.
Oh, okay.
So as you do this, you probably just look. A lot of the time, the reason I often say wait for close is because I don't want you. I want you to slow things down while you're learning, if that makes sense.
Yeah.
Because I know what emotions go through people's heads when they're trading, and particularly when you start out, I say slow it down. I've also sat there and been taught by people who are traders, and I know that I'll listen to about 50% of what they say, but I'm trying to be consistent and say, guys, just try and slow it down. I reckon in about a week, I don't expect any of you to do it. I expect you to be taking all sorts of trades within the candles because you'll start to see it quite clearly what's going on. Does that make sense?
Yeah.
Let me know if it doesn't, because I'm quite happy to phrase it better.
So based off of what you do mechanically, you don't wait for the close. You just sort of take it at the break, right?
Yeah. And look, the reason is, imagine you've been playing Mario Kart every day for 10 hours a day for 10 years. You tend to just start doing things. Now, I never really intended to start teaching people how to trade up until a couple of weeks ago. So I really haven't gone through a lot of the stuff that I'm doing. So sometimes I take trades and I think I should have probably not being overly consistent with what I'm teaching the guys. But the reality is you will all be doing the same thing because it doesn't take a long time to get your head around it. We used to get guys at the bank trading within probably 6 weeks, and that was with decent funds. But what are we seeing here? Here we got the breakdown. We swept these candles, come into that, which isn't great. We're having an attempt here. Come on, stay positive for us.
Are you allowed to say who you worked for?
Yeah, because this one's not going on YouTube. So I started out with HSBC and I worked there for a long time. Then I worked for Citi, and then I worked for Deutsche. Then I worked for some hedge funds for a long time. And then I worked for a private equity company.
How did you get into it initially?
I was really good at sales. So what happened was I used to sell like retirement schemes and those sorts of things for the bank. And then we had to do a huge IT project and they asked me to participate And I did a good job. So they said, all right, you did a good job. What do you want as a reward? And I said, I want to go and work on the dealing desk. And they said,